Joining me now, Dr. David Anderson of Texas A&M University. Dr. Anderson, great to see you. Thanks for joining us this morning.
Hey, it's great to be with you this morning. Thanks.
And before we get into consumer confidence and prices, how did the semester go?
My semester went great because I was not teaching class this spring. So,
Okay. So little bit of research and analysis.
yeah, focus on a lot of that stuff. Just, a lot of real applied research on markets, a lot of things on certainly beef prices. That's been in the news a lot. Just really things like that, catching up on some other stuff. So, when the fall semester hits, we'll be back in the classroom and sort of back to normal.
Yeah. Well, you got to give your brain a rest, and I know you want to spend time with your grandchildren. So I wanted to expand our conversation. Normally, when we talk about beef prices and egg prices, but I want to pull back a little bit. I saw some recent news that U.S. consumer confidence may have slipped a little bit, and I immediately thought of Dr. David Anderson, not because of the confidence slip, but because I wanted to get some clarification. So you saw the readout, you look at all the economic indicators. The markets, though, Dr. Anderson, seem to be doing pretty well. Maybe there's a disconnect there. Let's talk about consumer confidence. How do you see it?
Well, that's an interesting set of data. That survey work has gone back for decades and decades. And so, in that regard, it's a pretty interesting barometer of just, how are people feeling about things? It's not likely a perfect measure, uh, but that it goes back for such a long period of time, it gives you some notion of just what people think. And it has dropped. In fact, it's even lower than like in the late 1970s, early 1980s when we went through a severe recession in the 1980s and a period of inflation and so which is pretty interesting in that if that's sort of the measure, any consistency in that's kind of a striking measure. But I think it just reflects what people are seeing. We've had this burst of inflation. We certainly have higher gas prices. We've gone through higher costs throughout the economy, and that's on people's minds.
Let me ask you about how important, how tied to is this measure to what we just talked about, which is inflation. So if people are feeling less inflation, they're probably more apt to be more confident. But is that the only component to this? Meaning, does that really shape the consumer confidence? Is really that inflation number?
No, I think if we look at it, it's sort of a broad, a measure of what people think, how are people feeling, and it could be a drumbeat of a lot of things going on, not just an inflation measure. And so in that regard, it's sort of it's an interesting gauge of what people are thinking, but it doesn't reflect inflation. It could reflect just an overall perception of a lot of things. And so in that regard, it's, I think we got to be careful in how we interpret it, but it is an interesting measure when we put it with everything else.
So let's talk about putting it. I want to put it in context with the broader stock market, and I would have thought, and I know they don't move in lockstep with one another. They're not correlated, I guess is the right word. But stock markets have been doing very well, even with some of the challenges with inflation, with the war, blockades. I mean, you name it, some of the geopolitical events. How do you tie that back to? Because a lot of Americans, not, many Americans, not a lot of Americans, many Americans have investments. They have 401ks, IRAs, 403bs, 457, whatever. They're saving. So they're tied to the broader market. So when that market goes up, you got to feel good. So how does that tie into the market results? Or
Well, I
does
think
it?
that's an interesting part of it because, if your retirement plan is doing okay, and you see the stock market, that can give at least one segment of consumers a real positive feeling because, yeah, they may be paying more at the pump or more wherever, but boy, they can look at that and that's going up. And I think you make an important point. The stock market is not the economy. The stock market is, individual stocks of companies, and we have companies that are doing well, they're performing well. We have companies that aren't, and that's always the case. We've also got some segments that are booming, whether it's tied to the AI boom, computer boom, chips, you name it, those things are booming. And if we look at those broader indices, that's sort of lifting those indices up, not only but those individual stocks. So, but I think it's important to remember, the stock market itself is not the same thing as the economy, but they sure are related.
Yeah, yeah, and I want to try to tie back to the consumer confidence. If people are spending more at the pump, if they're, they have a general, I don't know, in the 70s, what they used the term a general malaise, right? I mean, you and I are probably
Yeah.
close in age. But if the consumer is feeling like there's a bit of a malaise, they're facing these pressures, their confidence has slipped. What about spending? Because, to tie back to the stock market, it's all based on earnings. So it's predictive, or it's a forward-looking measure of earnings, and earnings are really dependent on the consumer a lot of times. So how does this shape maybe some of those forward-looking measurements? That I'm not asking you to predict the results, but like in terms of earnings, I mean, if people are not able to save, not put money away, there's less money circulating, and they're not able to buy, less money circulating in the economy, which doesn't help these companies.
Yeah, I think overall that's right. It's this our consumers' ability to expend to spend. We go back and look, and something like 2/3 or 70% of our economy is consumer spending. And so, yeah, we might be spending more and saving less because we have to spend more because it's going to the pump or it's going to whatever. But, it's that income that we have to spend on other items, stuff we want to buy, that drives a lot of our economy. And so, if we're spending more on basic necessities, we're not spending it on these other items. And so that has I think that has a drag on the economy. Plus, it probably makes people feel bad because they can't buy some of the things that they want to buy. And so that generates this idea of confidence and their feelings about their overall situation. But I do think there's one other thing that's pretty interesting than this as well, and that
Sure.
is just how resilient we are as people. And I think that shows up in the overall economy as well, where by a lot of measures, there's plenty of positive things going on as well. And so, we have a pretty resilient economy, and the economy is just it's the aggregation of all 330 million of us in the U.S. and beyond, because we do trade. And so, we have a lot of resilient people and, a resilient economy as a result.
So we're coming up on America 250, and I wasn't really expecting to take it in this direction. But do you think that's the uniqueness of us as a people, as a country? And you said 330 million, but looking back, you're not a history teacher, but you're an economic teacher, and there is history involved. Is that what makes us unique relative to our European counterparts, our peers in Australia, in Asia? It makes us that resilience, that innovation. Is that what really sets us apart economically?
No, maybe that's true. It's we certainly are. We're we think back historically, we got. Well, I don't want to take this in an immigration sense, but most of our ancestors were immigrants one way or
Yep.
another.
Yep.
And if you think about it, we got the people who had that entrepreneurial spirit, were willing to take a chance, that rolled the dice on leaving where they were and leaving everything behind and starting over. And so I think that, and I don't think that resilience as people is unique to us. I think we see that everywhere, but we are a product of a really folks that rolled the dice and left everything behind and came here to take a chance on building something different. And I think maybe that has stuck with us some.
Yeah.
But I think we see resilient people all over the world.
No, well, I guess that's why humans have survived for so many thousands of years, and hopefully we'll continue to do so. Let me take it back to we were talking about and buying. I want to go back to something, another measurement, and this will be my one of my last questions about credit card debt. Um, some people are still spending. They are running up. It's buy now, sell, or buy now, pay later. They're running up credit card debt. I think I just read this morning it was $1.26 trillion in debt, credit card debt. Does that tell you anything about the broader economy and the consumer themselves in terms of earnings and predictive of the markets?
Well, it probably is a worrisome sign in that sooner or later you got to pay for that. And in terms of like some hard research that correlates that with kind of economic conditions, that's probably not my area to be
Sure.
up on that literature. But I think common sense would tell us that with higher prices, people are trying to get by. They use their credit cards more. And certainly that kind of debt is a real burden on individuals and families, and is probably a symptom of trying to get through what we've seen over the last couple of months, particularly at the gas pump, for sure.
Yeah, I don't think people are being frivolous. I think they're just trying to get, as you said, just trying to get by. They need to spend their money on wisely, and so credit cards or buy now, pay later are a tool to do that. Dr. Anderson, we're going to have to leave it there. Thanks so much for look. I didn't expect to get into history with you, and that was great. But I do appreciate your expert analysis when it comes to macro and microeconomics. Thanks for joining us, and we look forward to having you back again very soon, sir.
Hey, thanks for having me with you.
Well, thanks for watching, and don't forget we're back again tomorrow morning with another great expert and another great topic. You can tune in right here Monday through Sunday at 7:30 a.m. Eastern Time. And don't forget to subscribe to our daily newsletter, The Morning Pulse, for all the news in one place, delivered directly to your email box. Check it out at our website.